Welcome to the Gray Report. I'm your host, Spencer Gray, and every week on the Gray Report, we are covering all of the latest research reports, data sets, articles, and giving you some original opinions revolving the multifamily industry, real estate, and the economy. We've got some really interesting pieces today. One from the National Bureau of Economic Research talking about a changing of trend of fertility rates and the birth rates in the United States, as well as a piece from ProPublica taking almost a hack job on YieldStar in RealPage's lease rent optimization, revenue management algorithm and software. And then a piece from the New York Times, all about the rent revolution is coming. Politics meets the multifamily industry. Let's get into it. All right, welcome back to the Gray Report, joined again by our co-host, Director of Communication and Marketing here at Gray Capital, Matt Bosnagel.
Hello.
Matt, how's your week going?
Going pretty great, actually.
We've got a really interesting three sets of reports on the Gray Report today. We've been talking about them all week. They came out recently. It's these first two pieces, they kind of dovetail, and a lot of it's politics in the multifamily industry, real estate. Mm-hmm. I mean, we all know, rents are up. I mean, we're seeing it in the headlines. Yep. But price of everything are up, mm-hmm. right? And so a lot of times this debate is more fueled by emotion rather than of logic and economics. So we're going to try to see what we can find in the middle and see kind of what is on the pulse mm-hmm. of everyday Americans, because just because a policy doesn't make sense economically, we're going to have unintended consequences. That doesn't mean that the public doesn't think they want to see it, and it's not. They think it's a good idea, even though it doesn't may not achieve the goals that they are looking to achieve. Mm-hmm. So really fascinating, and again, so just the ProPublica piece, New York Times piece, they really dovetail with each other well, but. Man, it's been a really interesting couple weeks and months. Multifamily industry, debt markets, the economy. Mm-hmm. Are we in a recession? I think can I just say like we're in a recession?
Okay, all right, okay,
right.
I've been prepping myself for this. Okay, I think I'm ready. We are.
Yeah, and it's it's okay.
Well, that's a really good point. The people kind of are searching around for what's the cause of their pain. Yeah. And depending on what information that you have, maybe it is rents. And depending on your own experience, there are some people that are really pressed for rents. But then this is also a period in which rents are declining, whether it's seasonal or some kind of reaction to the extreme growth that we had in 2021. But it's not a linear thing. Depending on where you look and who you are, you've got a completely different thing. Maybe you drive a lot and gas prices are what you're really worrying about. But there's a lot of things, a lot of solutions out there. Maybe not all of them are the best ones. But you know what? On both sides of the aisle, there are wrong things people are saying. There are right things people saying, and there are some understood. I think that there's an understood solution to a lot of the housing.
I think there is. I think some of it's a tough pill to swallow, and a lot of times we're talking about public policy. Mm-hmm. The obvious solution is one that it's just again like the public, they just can't stomach. Mm-hmm. And the reality is, people are upset, prices are high, and people want solutions. And often people go to the government to say, fix this. I mean, it happened back in the 70s. When last time we saw quite a lot of inflation in the form of price controls. Mm-hmm. And then we kind of figured out price controls don't really work. And in general, when the federal government kind of gets involved into markets and private markets, they can really dislocate and misprice things. And it can feel good. Mm-hmm. In the now, but in the long term, it can really mess things up. And what we're dealing with post COVID, a lot of these problems are because of kind of overreaching from central banks and central governments. Another example that we've heard very recently, it was just announced by the White House, is this kind of meddling with the Strategic Petroleum Reserve. Oh yeah, and we've released millions of barrels from the Strategic Petroleum Reserve as energy prices have increased, trying to combat inflation. Although it does the opposite, because we know the cure for high prices is high prices, and we need the high prices to actually create the demand destruction, releasing the reserve, bringing the prices down, allows people to buy more gas. You know what? Then what's going to happen? Demand stays the same. You know, prices are going to stay elevated. And they announced recently that we've signaled that they're going to do another release from the Strategic Petroleum Reserve, even though prices have gone down significantly. It's mostly politics ahead of the midterm election. And then they've announced that they're going to start buying again, when the price is in the $67 to $72 per barrel range. And it's like, is the White House and the federal government, are we, entering into the commodities trading business essentially? And how does the federal government determine, the ideal price that we should be filling in the Strategic Petroleum Reserve? And the fact that the Strategic Petroleum Reserve is supposed to be for emergencies, not as a economic tool to help increase or decrease inflation.
Yeah, that's a really good point. And it all, to me, seems to boil down to this mix of the economists and the politicians, or at least maybe the politicians thinking maybe that they're the economists.
Well, the politicians playing economists.
And what's good for politics may not necessarily be good for the economy. And like you said, a tough pill to swallow politicians may not be willing to swallow that, which is probably why we had all that relief, in the beginning of the pandemic. We had the checks getting sent out, which may very well have been necessary, but still, there are probably a lot more harsher things that would have not.
There was something about those the stimulus checks. I mean, again, were people needing some assistance? Like, absolutely. I mean, the whole economy was turned off, and the government turned the economy off. But a lot of people got stimulus checks that didn't need a stimulus check. I didn't need a stimulus check. I was still working. My life hadn't really changed. We were doing deals, making things happen. And then you get the $2,200 or whatever dollar check in the mail, and it's like, great, but how many of these went out, and how much more money got pumped in the system and created excess demand that accelerated inflation and eroded the purchasing power of so many individuals. All of this, these are all things that can be concerning from an individual's perspective and macro perspective. A lot of these are the reasons why we invest in apartments to begin with, for situations like this, because of how well apartments perform in these types of inflationary environments. But certainly, the two things that can really screw up the multifamily investment thesis, we're talking about them today, Matt. It's public policy, public intervention, government intervention, and then it's birth rates and population growth. Really, a lot of that, what's been missing is immigration. Which is a part of the conversation, because there's only so much that we can do about birth rates in the United States. Immigration is a policy that the government could affect and allow for some more immigration, because we need the workforce. We have a major, labor shortage right now, and people want to come here to work. It seems to make sense for me. Make sure people aren't criminals, and they're here. They say who they are. We can figure out who's here. If you want to work, just come on in. Let's get people to work. Birth rate's a harder thing. Government can't just, maybe in China they can try, but here in the United States, it's hard to tell people to have kids or not have kids.
Well, I think about in Japan too, they have all these programs and stuff. It's like, this is the data.
Incentivized, but how much, how much can you really, tax credits and all that, but I don't know, that's a lot to bring a human being into the world.
And as we'll get to, it's a little bit mysterious what are the situations in which people are going to have more kids. They used to think it was recessions, people would pull back, but maybe not this time. So we'll see.
It probably was for a while, and people just they gave up. Like, screw it. Screw it. If I want to have a kid, I'm going to have a kid. At least that seems. So we're going to get to that piece in a little bit. But again, today it's interesting because we're talking about major drivers of investment. But first, let's talk about political intervention, government intervention, and the desire from some individuals out there in the public to say, hey, they're making the observation that, hey, rent is higher than it used to be. I don't like that. I don't have as much money in my bank account as I used to have, and do something about it.
For the past several weeks, we've been discussing some of the reporting from major news organizations about the high rent prices. We've mentioned the differences between the categories of affordable housing and of market rate apartments.
Yeah.
And I think that, and we may not have slowed down and really laid out the specific difference, but I think it's worth kind of delineating it right now. And I'm going to give you my idea, and then you can tell me where I'm missing out. Market rate apartments are, or market rate housing in general, has a price determined by the market. This category is the bulk of what we cover on the Gray Report. It's a bulk of what we invest in, probably the totality of what we invest in.
So not subsidized.
Yeah.
Not affordable.
And then affordable housing refers to housing or apartments with a price that is below the market rate. It's supported and subsidized through the government and nonprofit organizations, and builders and investors in affordable housing will get maybe it's a better loan term, maybe it's some other support from the government in order
tax credit financing or tax abatements. Mm-hmm. And sometimes surprisingly affordable, it's all based on percentage of AMI. And so sometimes in areas that
What's AMI?
Area median income.
Okay.
And so sometimes 80% of AMI can actually above where market rent is sometimes.
Yeah. Interesting.
That deal that's right down the street from us, because the AMI just in the immediate area is so high, their rents, they were allowed, their affordable rents could actually be kind of at market or even above. So sometimes you would assume that affordable rent or units that are set aside for whatever percentage of AMI are going to be cheaper than market. Often is the case, not always.
And so, and I think the other thing to note when you're talking about affordable housing is like you've got more regulations, you got more rules to follow. There's probably rules about you have to make sure that you're not turning anyone away. You have to make sure that you're setting the rents at the right price, and all of these kind of extra rules probably. So you can correct me, but I'm not an expert in affordable housing. But I'm thinking that there's a little more strings attached because they're giving you this money. They're going to ask you for some stuff. So the reason why I wanted to differentiate that is because much of this article, I think, deals with, if not purely the affordable housing category, then kind of the tensions between affordable housing and market rate housing, and sometimes they conflate the two. So when you see a lot of the critiques that you see in this New York Times article, they're talking about the rents too high, but it is largely a government kind of political problem, and the way that they frame it isn't necessarily that they'll go through the same testimonials and anecdotes and really tragic stories like we hear a lot.
Yeah, that's what most of it is.
But the upshot of it is, I think, majority this is political pressure. These protesters are protesting against policymakers instead of maybe like fat cat landlords. Although they do talk bad about landlords.
They show up in some landlords in front of their house, and I mean they are at city council, telling city council and protesting of they need to do something. The rent's too damn high. But again, it kind of comes back to are they protesting outside of the utility companies that are really true monopolies most of the time that are raising prices considerably because commodity prices and inflation, and there are some good reasons too. But I would think that that is they have much more. They could have much more influence on a big line item. And again, one of the reasons why rents are high is because utility prices are going up. The point is, it's not just utilities, it's not just rent, it's not food, it's not just gasoline. We're in an inflationary environment where prices of everything are going up, and it comes back to this knee-jerk reaction to someone fix it, someone stop it, and institute some kind of regulation or price controls to bring this all in line. But oftentimes, price controls just don't work because the whole point of markets, it's a resource allocation mechanism in how to appropriately price goods and services and commodities at an appropriate price. You need a market in exchange, and a buyer and seller to agree upon a price to create that market to determine where that value is. And so without that, or with influence from an external source of putting a floor of a ceiling on a certain price, the market doesn't have appropriate signals and can have a misinterpreted view on where supply and demand is that leads to malinvestment or misinvestment, and you can create much larger compounding problems over time.
Yeah, I agree with that, and I think that some of the implied solutions there would lead to a certain amount of like market upheaval. There are some sensible points that they make in this article that have less to do with kind of reshaping or putting a Band-Aid on it than doing some of the stuff that's like, okay, this is already in the affordable housing category. I don't really see anything wrong with what they're calling for.
Yeah, it essentially more funding for affordable housing.
Yeah, they're calling for having a lawyer present during eviction proceedings, and that's like, well, all right, okay, that seems fairly sensible. And they're also just to kind of summarize it, it talks about they are pairing aggressive protests with traditional lobbying, and it exploded onto the political scene during the pandemic, which has since become instrumental in passing tenant-friendly laws. This actually chronicles a group, an activist group for affordable housing in Kansas City, and it is and they're talking about how COVID-19 and inflation have tipped smaller cities into an affordability crisis. This has opened the aperture for policies once deemed politically impossible in a wider range of markets. That seems like they're hinting at rent control, but they never really. That's about as close as they get to it. It's really more about providing more resources to affordable housing. One of the big protests that they cover here that kind of bookend this whole article on is a protest in which the city has decided to dedicate more resource to middle income housing than to affordable housing, and so that's kind of the big disagreement that they cover. But which is
interesting because oftentimes if you're at the lowest of the kind of economic ladder, there's typically more assistance, and then there can be that kind of gap between very low income and kind of like you're right on the edge of where you maybe don't qualify for affordable housing, but the market rate is a little bit too expensive. So I mean that which it's interesting that they don't want to support.
Yeah, and again, I don't know what the makeup of this group that is detailed in this article. What they're if they're all affordable housing. I'm guessing that they may not be. Maybe it's a situation where.
Let's be real. I mean, it's not just they want more money for affordable housing.
Yeah.
I mean, in the slogans that they're chanting are cancel rent, just cancel rent, mm-hmm. And then another quote that I took down here is that every eviction is an act of violence.
Yeah,
and essentially when you're essentially if you're squatting or you're violating the contract, your lease, and you're staying there, you're not paying. That it's not physical violence, but you are misusing someone's you're trespassing at that point, which is another form of violence. So instead of throwing words like violence around, I think that just adds so much emotion onto it. And cancel rent again. What is the solution? You want to have all private landlords exit the market? How do we provide housing for the 300 or however many the 400 million people we have in the United States?
Yeah,
like they're not reasonable. Thoughts.
See, and that's where I think that maybe I let some of the cancel rent arguments kind of glance off me, but some of them
are the same group.
Yeah, well, and it's true. I think that there is a group of governments that are on the left, or a group of there's a wing of the left wing that kind of thinks, all right, we need to increase the supply of housing. Maybe these Band-Aid solutions like rent controls, those aren't going to really go over very well. But maybe there's a possibility that affordable housing doesn't meet the appropriate standards. Maybe they want better affordable housing, or maybe people that qualify for affordable housing aren't getting appropriate housing. Those are all problems that are well within the wheelhouse of existing government programs. But to institute a policy once deemed impossible, that is rent control, and I don't think that that's going to fly.
Yeah.
Another thing, just to add, and they're talking about affordable housing and the fact that you can't afford housing, and that it is creeping into smaller cities. What once was in New York and San Francisco now is in Kansas City. We covered Kansas City last week, and I don't know. I feel like Yardi Matrix is a pretty credible source. It's just one source though, but they had Kansas City at the bottom of rent to income ratios, meaning that rent is the cheapest in Kansas City. So this could further emphasize the point that the New York Times is making, that like this is happening everywhere. If it's happening in a city where rent is so cheap, but it also a little bit, put in the context, maybe. Yeah, it just doesn't square.
A lot of it does not square. And again, it's being fueled by emotion, which is totally fine. Until it starts affecting other people's rights and the way that we're again managing these resources and trying to provide housing to people that need it. And I think that the discussion on the housing crisis, the solutions fall into two categories. One that respects our understanding of kind of property rights and somewhat free markets, and one that aims to completely remove property rights and free markets and just having a market-based system for housing.
So I kept thinking about like, all right, well, if I'm thinking that this is within the wheelhouse of the government and the government could address it, that is saying that like, well, I would have to be, as a citizen, kind of prepared to swallow a little bit higher taxes. And it's interesting. I was kind of rolling that around in my head as I was reading the article. And then I read an opinion that jibes with mine. I felt like kind of a fat cat because the guy with the clearest head on this, it's like I felt like this huge capitalist. But that's what the best idea in this whole article comes from Eli Unger, the founder of Mac Properties, which is based in Englewood, New Jersey, and owns about 9,000 apartments. He said that the cost of development is now so high that the most reliable way to make money is by building apartments for tenants who regard the cost of rent as a matter of curiosity. So where people are making money right now is not necessarily building affordable housing, it's building market rate housing. He says that it does leave groups behind, but he said the folks who see themselves as middle class and are feeling increased worry and pressure as rents grow up faster than incomes, and the people who are vulnerable in our society and desperately need housing that no developer can provide without a massive subsidy, those are the big people that are affected. Maybe on the lower end of the middle class, and then in kind of the lower class where we're just not building those. And he said, as a citizen, I would be entirely comfortable with my taxes being higher to provide well-maintained housing for those who can't afford it. The question is, how is that going to be achieved? And market rate developers are not unilaterally going to say, I'm going to reduce my income to achieve this goal. Basically, I think it's like create the conditions where people will fill in and do that. Maybe don't create the effect.
There's a lot of options in the middle there too, which happens a lot, is that, to encourage development and to get the proper zoning and approvals, developers have to set aside. I mean, most of the new, not all, but a lot of the new developments that are built today, at least in Indianapolis and a lot of the markets I'm familiar with, there are units that are set aside for individuals. There are some affordable units that are set aside for individuals that are making a certain percentage of AMI, typically 6% or 80% of the area median income. And often those developers will receive tax abatements on that property for doing that. Okay. So we're going to give you an abatement. You're not going to have to pay your full tax boat for 10 years as long as you set aside 20% of the units for individuals making only 80% or below of AMI, and then that's going to burn off. That tax payment's going to burn off over 10 years. And people first say they're not paying taxes, but there are still plenty of tax being paid, personal property tax. The tax payment doesn't always cover the full tax amount, but then you have an asset that is going to be paying taxes in 10 years. You're providing affordable housing, so it's not like you're decreasing, the tax base, because you are adding that eventually, and the community is getting something out of it. Yeah. So there are plenty of solutions like that are happening all the time. We just need to do a lot more of it. But if you do anything to discourage development, because on one side is like, yeah, it's true, you can't build a B class or C class apartment, mark a rate and make a cash flow. It costs too much. The cost to build an apartment building is the same whether it's C or A. The difference is, on the finishes, which are a fraction of the cost of the building. So it's still going to cost, just throwing rough numbers, let's say it's going to cost anywhere between $180,000 and $200,000 per unit to build. Well, you might as well spend, closer to that $200,000 and charge and have nicer finishes. So instead of charging $1,000 a month, you can charge $2,000 a month because your value is going to be so much higher. Why would you, put in the cheaper carpet that is marginal when you could get a much higher rent of just finishing it out a little bit nicer? So, but on the long term, you have to have that high-end luxury product because it adds supply and those Class A assets. You can't build Class B today without subsidies, but that Class A in 10 years becomes Class B. We have to be developing the luxury assets today that become just the regular B-class apartment in C-class apartments for other individuals, down the line. So we have to be thinking into the future, and that's why markets like California and New York, especially California, where they haven't been able to build that much. Now, decades later, we're seeing these problems creep up, and it takes so much effort and so much building and time to get back on top of it. So it's like, maybe we're not building. We're building for now, but we're also building for the next decade or two, and we just need to build whatever we can, any type of housing units, now, and even if it's not the right set not the right product type for the incomes, we still need to build, but then also find a way, because we do have immediate problems that we can't wait a decade or two. What are those solutions that are in the middle?
That's tough because the lag, we need affordable housing now, and to have to wait that 10 years, you can't build an older building and make it new. You can't build a new one. So that's incredibly, incredibly tough.
Matt, any more points on this New York Times piece? I mean, because to me, my big takeaway is that there is just frustration out there in the public, and people are screaming for solutions, and a lot of people feel like they're being squeezed and things are expensive, and rent is something that everyone has in common. It's a big chunk of their paycheck, and it's something that they feel like that they should be able to maybe get a little bit more control over, and it's and they want somebody to do something about it.
And again, depending on what your perspective is, on what trends you're following, this will look like a bigger. You can really lead yourself down a logical road that may not be valid if you're going on old data.
Exactly. All right. Now, again, excellent dovetail, Matt. But this will kind of explains one of the reasons why rent is high, and it's a market mechanism of being able to appropriately price your rentals. And so there was a big piece that ProPublica put out, not exactly a conservative outlet, but it's rent going up one company's algorithm could be why. It's essentially a I don't know. It's a hatchet job, but I mean, it's basically calling out RealPage's YieldStar, which is the revenue management software and system that helps property managers set their rents on a daily basis based upon comparable properties in the market and day-by-day supply and demand metrics. Matt, why is that a bad thing? It seems like it'd be a more efficient market.
So this is and I think that this is their argument. So let's say every landlord in a square mile, or maybe just like a half mile, whatever. Every landlord in the same area has the same rental management system, and that software is telling them now has control of that whole market. So it's going to say, let's all bump prices up. There's going to be no competition that wants it. There's no limit. It could just keep going up and up forever because it owns that. So that is I think, and I'm trying to represent this accurately, and maybe I can get a mean email, but I think that's the underlying argument. And I don't think that it accounts for exactly the specific makeup of there's more than one rental management system, and there's more, and landlords don't, they don't take their hands off completely when it comes to rents. And these rental management systems themselves aren't, they're not evil. They're just programs.
The machine.
Yeah.
Well, and it's really the emotion that's being taken out of it. I think the biggest effect here, and that I've seen, and because these types of algorithms and software have been around for about a decade or so, but their use has been growing dramatically over the past couple of years, without a doubt.
I do like how they characterized it. So on the beginning it says, real estate tech executives gathered at a conference hall in Nashville to boast about one of their company's signature product, software that uses a mysterious algorithm to help landlords push the highest possible rents on tenants. I'd like it, if you're going to discuss a mysterious algorithm, I'd like it to be in a basement, in a shadowy, smoky basement. But I thought, they're talking about kind of quasi-secret meetings and executives clapping each other on the back because of their beautiful, mysterious algorithm. So that's kind of how they characterize it on the outset. Okay. These are these bosses that are making these decisions that you have no control over, and I think that's the implication too. When they raise the idea of a monopoly, is that there's no limits anymore. And I have some I have some counter arguments to that, but I think that's mainly the thesis of the article.
Okay. So what I was trying to say, Matt, is that what's really going on here is we're taking the emotion out of the equation, where in the past we've had an individual, a human being, a property manager that's setting rents on a daily basis, or often on a monthly or quarterly basis. And that person often has a relationship with that tenant base. The algorithm doesn't have a relationship with anybody. It's just looking at numbers and data coming in. The property manager may not be on top of understanding where the comps are. They may not have the right set of comps. They might not be calling out to seeing where prices have moved. And then when they're going through and looking at the renewal rates, they may say, well, and this is what has happened in the past, decades or so, is that, up for renewal, $15 increase, nominal $25 increase. That was kind of the standard. Our market rents, well, we haven't changed. Maybe we'll increase our rents by $25 this year because that seems good and that works for our budget. Not really doing a detailed analysis of where the market is, and even if they did, they would feel hesitant to bring those rents to market because, again, they are going to be looking those prospects and current residents in the eye, and they've made that decision to raise the rent. This takes that decision, again, out of their hands. Now, again, they can not go along with the rent increase. It's just a suggestion. They don't have to go forward with it, but it's no longer like them picking the number. It's like, well, YieldStar is telling me that the rent should be $1,800. I know that you were paying $1,500, but the market's at $1,800 right now. Yeah,
I think that there is a place for emotion and for kind of humanity when you're dealing with rent, when you're dealing with people's homes. It is like a very emotional topic. I think that renewals is a little bit more dicey. Like, I think that you can really work out with people. If
there's some residents you want to keep.
Yeah. And so that I could definitely see it there. But when it comes to market rates, if people pay for it, then that's it, right? Like, if it was an apple that was $10, then and no one buys it, it's going to be $8 maybe tomorrow.
That's what the market is there for, is that they're people will accept a price or they won't accept a price. And then just because you put a price out there doesn't mean that the market will accept it, and you'll decrease and find where the market is. Yeah. And that's what these softwares are intended to do. It's not just to just keep pushing rents to push rents. It's to figure out where the market is and to make sure you're not leaving money on the table and you're not charging $800 and you should be charging $825 or $850 or whatever the amount is.
Yeah, I did some lazy Googling and I was like, well, maybe I could be wrong, but I'm sure gas stations, have like this software that does this for it and sets the price
exactly.
That's it.
Do you think that a gas station owner shows up to work one day and be like, well, this is my cost with the gasoline, but
people are having a really hard time.
Yeah, people are having a hard time out there. Yeah. I should increase, it should be $5, but it's $4.75 today. Yeah. Like, that doesn't, because it's a business, right? And the market is what the market is. Yeah. And market rate housing, again, market rate is like the key differentiator, is that it is what the market is. And again, it comes back to the proponents of rent control. They don't like the concept that the housing market is a market-based system at all. They think that it should not be a commodity or relative commodity. They think it should be a public good.
Yeah.
And so, and again, people may think that when I keep coming back to this, maybe extreme conclusion or kind of the eventual logical conclusion of where it's going, but if we don't kind of parse what they're actually saying and where they're actually going, we're going to be talking past each other, because if you're not looking for a market-based solution, well, that's a completely different discussion than chipping away at the edges and adding regulations.
Yes, because if they're trying for a solution that's not a market and they're trying to inject it into the market, no, the only way some of these solutions will work is if we revamp the entire system that it's not market-based. I also think that the real key that kind of that I was kind of hinting at before when I was talking about getting the right data and coming from the right perspective. One, yes, I think that there's a lot of discussion. When are we talking about affordable housing? We're talking about market rate, but also rents are going down. Rents are, seasonal downturn, moderating, normalizing, whatever. We're reacting to the 2021 heights with a little bit lower demand now. But the fact of the matter is, they are painting the picture of a reality that is in the past. I think that they're getting CPI numbers, maybe, and using that to justify their portrait of a market that is steadily going up and up and up. But the fact is, these programs, these faceless, evil programs, created by evil executives in smoky rooms or maybe open air conferences, but they are choosing to lower the rents. Why would they do that? Why would they? If it doesn't they're not making a profit. They got that monopoly. Why are they doing that? And I think it's because they do respond to broader market forces, and they aren't these systems of automatic, monopolistic grow. So,
it cuts both ways. It sees where the demand is and where leases are and what supply is, and if there's not a lot of demand and if there's a lot of supply, then prices are going to go down. And again, people might not like where the market is, but the market is what the market is. Now, the biggest issue with revenue optimization, lease rent optimization, Yield Star, whatever the program is that it's garbage in and garbage out. If you have the wrong inputs plugged into Yield Star, if you've got the wrong comps, and sometimes the market can be too small, you just don't have enough inputs in general, it can be thrown out, bogus information. So it's definitely not perfect, and it does require a human to kind of oversee it to make sure that it's got the right inputs, the outputs make sense, you're within line. But yeah, if prices are going down, the prices are going down, and they will go down quicker using an LRO, Yield Star, whatever, than if an apartment manager has a property manager is the one manually doing it. Because they may, for right now, the rents could be maintained higher because they were looking at the demand back in a couple months ago, not realizing demand has fallen off. They're like, well, our rents are still, well, I don't want to decrease the rents right now. We just increased them. But they're not looking at, day by day, real time information.
I think that there is a subtle point in keeping the human involved with when it comes to renewals. Like if you are already moved in somewhere, it's kind of hard to move out if you're if the renewal rate is increased by an exorbitant amount. But if you are just deciding on where to live, there are you have a little bit more choice there, and I think that the consumer still has some power, and it's not like these robots are ruining our lives. But maybe I'm pro-robot. That's gross.
Well, and again, it's like it comes down to it's just making the rental market that much more efficient. And our efficient markets are usually good for like the end consumer. Usually at the end of the day, but obviously, and I mentioned that. I did an interview or I was on a panel for the Indianapolis Business Journal on commercial real estate and talking about what technology is changing. And I mentioned this type of software as driving rents and being closer to market. And I think it's not going to be adopted less and less. It's only going to, this is where we are. And I don't see how, the genie's not being put back in the bottle. Again, because if you think about other markets that have any kind of price prediction, any type of forecasting. Everyone's using forecasting and trying to figure out, what the right price is at a given time.
Yeah, I contacted the author of this piece, but I offered them a chance to appear on our program.
Did not provide a comment by the time.
Did not provide a comment by the time of airing, unfortunately. But I do want to note, and maybe RealPage would appreciates the idea that they're the only ones with rental management software, despite the fact that this is like a hatchet job. But they're not. There are a whole slew of other companies that are having rental management. So it is not the monopoly that it seems here. Calling it a mysterious algorithm also conveys the idea that only one company might have it, but there's a lot of companies that are doing this. So.
Yeah, no, YieldStar is definitely the predominant, LRO revenue management software, which is different from the RealPage property management software. It's like a separate product that you can use YieldStar with RealPage, but you can use YieldStar, I believe, with other types of property management systems as well. So it's like it's a RealPage product in RealPage's world of offerings for commercial real estate, residential real estate, but they don't have a monopoly. Now, if you were talking about monopolies in real estate and moving prices, information, you could look at a CoStar Group, which owns CoStar, Apartments.com, LoopNet, 10X, and a bunch of other apartment commercial real estate related kind of services and websites but even then they're not the only one. I mean, there's a handful of other services that provide somewhat similar data and services. So again, I think the New York Times piece. It's two sides it's not two sides of the same coin, but it's basically it is underlining the frustration that many people have with this inflationary environment.
It's searching to plug the hole in the dike rather than maybe like building a better one in the first place. It's like, putting the Band-Aid on instead of looking back and creating the systems that and again, like you said, it could take some time because there's so much of a lag between building it and the supply coming.
Yeah. And I don't even know if it's putting the Band-Aid. It's like putting some like numbing cream on there that's like you still have like the open wound,
it
but
feels
like
better.
You can't feel it anymore for like 10 minutes.
Yeah, I like that. That's good.
That's a weird analogy, but okay. Well, let's talk about birth rates, Matt.
A little bit better. Yeah.
Yeah, because this is all. I don't know. It's frustrating, and because here's let's bookend it with this. It sounds like you and me, Matt, we're just two heartless, ruthless, greedy, money-making capitalists that don't care about people. Yeah. Robots. And we do care. And we just brought property management in-house recently. We have a deep, feel a deep responsibility to our residents and tenants and future residents and tenants. And we don't want anyone to be overly burdened. That's why we have strong criteria to rent, because we don't want anyone to live somewhere where they can't afford.
Yeah.
At the same time, we're seeing expenses go up across the board. Our revenues way up, expenses way up.
Yeah.
We're not. It's tough. I mean, we're paying people more. Utilities are up. Property taxes are up. Materials, everything is more expensive. And so, sure, we feel like we've raised rents quite a bit, but then when we look at where expenses have gone, it's not as though we're just lining our pockets of cash every day and at the expense of the people that are living in our communities.
Yeah.
It's a universal issue that we're all dealing with higher prices. And again, a lot of this it was created by the governments that those that are burdened are asking them to come fix the problem again.
Yeah, I remember this is about a year ago. There was an article that said, operating these apartments and investing in these apartments or what we're doing basically is as an operator, it is not a passive income, it is a marginal income, which means, you constantly have to work at it to keep these things running. And there's, operating costs and all that kind of stuff. And it doesn't just magically run by itself. If it did, that'd be great, but it's not.
No, it does not. All right, let's get into this, Matt, because the National Bureau of Economic Research put out a working paper recently that I think that surprised a lot of people. But this was kind of the opposite of the narrative that we've heard from quite some time. But this is recent, just came out in October. The title is The COVID-19 Baby Bump, the Unexpected Increase in U.S. Fertility Rates in Response to the Pandemic. Now, there are some anecdotes that I think that we were saying earlier. They're like, I bet there is going to be a baby bump because people are at home, not doing anything. Millennials are getting out of that age where they're thinking about having kids, but like it just wasn't showing up. People weren't having kids.
And so people then thought, oh, no.
You think they just got tired of waiting?
Yeah.
They put it off long enough.
Well, and that's funny because, we did. We expected maybe a little baby boom. And then we were like, oh, no, there isn't. There clearly isn't. And then now we're finding out, well, maybe there is. But the broader context of it was something that I've been worried about for a few years. And really is the kind of dark mirrors, or whatever, the dark reverse or inverse of this affordability crisis is the idea, that population's going down. Specifically, this article says on the outset, between 2007 and 2020, the total U.S. fertility rate, which is a measure of the average number of children expected over a woman's lifetime, it declined from 2.1 to 1.6, setting new records for historic lows and prompting widespread concerns about the future of the American family, the strength of the labor force, and the solvency of public programs that rely on the contributions of younger generations. I think the multifamily market benefits from household growth and population growth, but there are other more fundamental reasons why this is important. Our whole economy is set up under the assumption that there's going to be a rolling treadmill of people and consumers, whether they're eating baby food or Werther's Originals. There's always people down the line, and when that dries up, then plans go wrong. And I think it's immediately seen, for me at least, is like you got to have more people to live in the apartments, but you got to have more people eating apples too. It reaches into every area of the economy, and it is something that I've been thinking about. And I'll just be specific. What if we build so much to alleviate the affordable housing crisis, but then due to low fertility rates, low population growth, we suddenly have way more apartments, that the wave kind of crests, and then when we're on the other side of it, it really screws a lot of people over.
Yeah, that absolutely could be a concern. Yeah, low population growth and negative population growth is, not just for the housing industry, but as an economy as a whole. Look at other developed countries with kind of negative population growth, aging populations. I'm thinking about like a Japan or like much of Europe. It requires massive government central bank intervention to kind of keep the Japanese economy pushing along. And there's all kinds of other societal and dependency issues that are created when you just don't have that many younger people or aren't having kids anymore.
Yeah, and specifically when it comes to the numbers, so it says 1.6 was this fertility rate that we're at now, and 2.1, which is where we started at 2007. 2.1 is the kind of replacement rate of fertility. If you keep that,
we need to be at 2.
Then we're, but 2.1 is like where it all kind of evens out, and we're well below that at 1.6, but we make up for it with immigration, and that's why stricter immigration. If we cut that faucet off, we will not be able to. Our population will start decreasing very fast. And another thing that's really interesting is that, and you can see this on these charts right here, actually, is population growth for U.S. born women was much higher than for foreign born women. Foreign born women, that it's their first they were born somewhere else, they move into U.S. and they tend to have a lot more children than U.S. born women, but the U.S. born women are outpacing that.
You just look at this. Trend reversal. It's been going down, and that's a big deviation from the trend, and that's kind of across the board. When we look at a lot of these graphs, is that a big jump, percent deviation from trend among U.S. born women. That's it's quite a bit. We're looking at basically a 5% deviation from trend. Which had been basically in kind of as call it a 1%, standard deviation range or so. Pandemic, it went down because no one was doing anything. But man, now what I'm curious about is because we've talked about this and of how same reason why things slowed down in the pandemic. People don't want to make any big decisions when there's like economic uncertainty out there. We had in 2021, people were excited. It's like, all right, we're back in the roaring 20s. Maybe things are going to be good anymore. People are much more confident about the future.
Yeah.
Last year in 2021, their stock portfolio, 401k, they're 30% wealthier than they were, 2019 or whatever. Not the case necessarily today. Same questions of economic uncertainty, global recession, inflation. I'm curious if we're seeing the baby bump right now is more of a product of 21. If we're going to see a swing back down,
that's a good point. Yeah.
But how transient, how temporary will that be in these movements, and will we continue on this trend breakout? Where it maybe in 2023. Once we get through whatever turbulence that we have to get through over the next couple months, however long it will last, I think, in my mind, near the end of next year, kind of, I'm thinking like August 23, things are going to start looking pretty good again, maybe. People are having babies anymore, or is this is this just demographics because here's the reality. You've got a lot of women that are in their early 30s, and they are thinking, or they're being told by their friends or their moms and parents and whoever, that like you got a ticking clock on in order to have kids, especially for the health of yourself, the health of the mother, health of the child. Like it becomes more difficult to have kids as you get older, and I think that most women are acutely aware of that. And there's the median age right now of a person in the United States right now, I think it's 33. You're getting to the point of where if you're going to have kids, like it's time to start, having kids. People have been putting off that decision longer and longer and longer. But again, you've got this avalanche of individuals who are just like, I'm going to have kids. I need to have kids now.
Yeah.
Who knows if the times are right? And it never seems like the right time to have kids. I mean, like you can't take a spreadsheet out and, I mean, this is classic, in the Parks and Rec episode. You can't be like, oh, I'm budgeting for my child. How am I going to afford I can't have a kid. Like that's not how it works.
Yeah.
People across the developing world have children all of the time and are able to care for them most of the time, hopefully, and you're able to figure out. That's the whole thing about having kids. You figure it out. Maybe you change the way you do things in life. There's no type of incentive and motivation like, having a child, bringing a kid into the world. Like, you think about things differently, but you're no longer just thinking about yourself or your partner. Your responsibility, the way you view the world just changes, and people just figure it out.
Yeah. I one of the interesting things about this is, for as messy as household formation and population growth is, and kind of inscrutable in so many ways, is that it seems like there's some cause and effect. Like, for instance, these foreign-born women, the decrease in their fertility rate, they're arguing in this working paper that it was caused because this is when we were locking down, and it is when we were kind of preventing people from going to different countries and stuff. Yeah. And so that's really kind of locking them in wait and see mode. And then on the other hand, white college-educated women were having a lot more kids, specifically college-educated women were having a lot more kids because they felt like, okay, this is safe. It is almost, I think, it is an optimistic, if anything, is an optimistic action and decision is to have kids.
It's true.
And they are really connecting it to remote working. And I don't know if this is borrowing from the future or if this is finally releasing, the decision that multiple people had from beforehand. But I'd like to think that maybe continued remote work will create a situation in which, in general, going forward, where more women will have kids because, like, okay, now I can work, I can watch my kid, I can be at home. Maybe it becomes an easier situation for a lot of people, and going forward, it will probably at the margins, but maybe we'll see population growth as a result of remote work. That's my hot take, but
it's going to be interesting because, and I think, not to get into the whole work from home discussion, but that question of, it's like, can you work from home and take care of your kids at the same time? It's not enough.
But if it comes with like flexible hours,
exactly. It's a flexibility I think is important. Just real quick, just because I just found the graph, looking at kind of ages. We're talking about millennials. There's just looking at like a divergence between ages, looking at ages 25 to 29 and then 30 to 34. They were pretty much aligned, sort of. Actually, there was a higher birth rate for younger kids, 25 to 29, back in 2015, 2016, kind of had parity in 2018, 2019. And then it really happened before the pandemic. And again, like a lot of these trends, whether it's a move to the suburbs, a handful of other trends, this happened before the pandemic. And then then eventually it accelerated, where it was still along the trend line for the 30 through 34 individuals in terms of the birth rate. The 25 through 29 really plummeted way down and has pretty much stayed below, really kind of stayed below the original trend. It's on a new trend now. But the 30 through 34 has completely broken out, compared to the trend.
Yeah, that's really interesting. It's like you get in these situations where finally, you can kind of handle this, and then and I would say that if you're 20 to 25, you're not as sure of your professional trajectory as someone from 30 to 34, and maybe from 25 to 29, you're less likely to remote work. Although that's another thing.
Who knows? So I think this is something that we're going to have to continue to track, Matt. To see if this breakout continues, if we're seeing a true baby boom, COVID, millennials, whatever the cause, whatever the effect, whatever, will this continue? Because not only could this change some of the assumptions that we have been making over the long-term prospects, not just for real estate, but for the U.S. economy as a whole and future GDP growth. This could be a complete new variable assumption change for a lot of models over the future. Also inflation, because when you have kids, you spend a lot more money on stuff.
Yeah. Well, and you're talking about if we really are in the midst of the greatest wealth transfer in history, then that could play a fact.
It could
definitely factor into this equation. So I'd be very interested to see if this sticks, because I don't like the what's so different about 2007 and now that people are having so much less kids. We were getting in the this recession kept. People lived through that. That's 15 years of continual kind of desperation, and then finally we're kind of starting to peek our heads in 2018 a little bit, and now we're out, and that's maybe we see that in birth rate. There's a general optimism apart from the Great Recession, and maybe from 2023 recession, but I don't know.
I think the recession, they'll probably say the recession started in September. Maybe August, probably September, and I don't know when it's going to go through. I don't know, but I think it's going to be early spring, early summer when we get out of it. But we're not going to feel like we're out of it until August.
Or
September.
That is funny that
and that's like my gut of all the inputs in my brain. That's what it spit out, and I can't tell you that I don't have any math.
Well, and that is actually a really good point, is like the feeling of recession and the kind of perception of recession that flowed for a decade after the Great Recession, and certainly it's not gonna completely just turn off right after.
So I just see too many. I mean, things are all screwed up, and what I'm concerned about is the kind of the structural underpinnings of like the financial system of the things we can't see, and that just like cause like a domino effect that just absolutely screws liquidity. That it just things fail because of just the financial systems. But like when I look at like the real economy, when I look at employment, when I look at just the way that the economy is moving, I'm relatively optimistic.
Yeah.
I think that we're getting supply chain issues figured out. I mean, we'll see what happens with the war in Ukraine and everything else, but to me, people are trying to move past the pandemic and are trying to move forward. Yeah. And I think that desire to move forward will carry us through. And again, that's like a total emotional thought and total anecdote.
And again, like I I did not live through the high inflation of the 70s and 80s, but man, it does seem a lot different than the Great Recession. There was this pivotal moment that really destroyed so much wealth during the financial crisis. And yes, the pandemic happened, but people don't feel like poor like they did there are certain people that were really devastated by the pandemic.
Well, people haven't lost their jobs wholesale.
Yeah.
I mean, like they have less money it appears like they may have less money to spend because their grocery bill is higher, they're filling up their gas tank, and the rent check's more. But their income's also gone up a little bit, but they still have a job. Mm-hmm. The only people that have been really losing jobs recently are very high-paid folks working in tech. Yeah. Like those are the businesses that have seen the layoffs, but only feel so bad for the software engineer at Google that's making $500,000 a year.
And again, like there are people that have lost a lot of money that may have lost their job that do feel poor, justifiably so. But like on the whole, you're not seeing underwater mortgages. You're not seeing people's wealth just kind of slip out from under them. So I'd like to think that we're on much better footing than we were.
It's the rhetoric, and sometimes I wonder when you hear Jamie Dimon and some of these other very large influential kind of financial people from the finance world talking about doom and gloom, and what sure, it's prudent, and you'd much rather be the one saying like batten down the hatches rather than like all is
smart,
good.
Don't you?
Yeah, you sound smart, and then you sound conservative. Everyone wants to sound like my conservative underwriting. Everyone's conservative. What reminds me is when Bill Ackman came on CNBC back in was it March 20? No, sorry, April 2020. Early on in the pandemic.
Yeah,
and basically came on and said, I am living in a cabin out in the woods because like the world is like absolutely gonna I'm
gonna have to call that up on YouTube.
Is absolutely going to shut down, which it did, and it's going to be horrible forever or for a long period of time. I mean, he went on I remember listening to it live. I remember I was in my truck and it went on for like 20-30 minutes, and everyone was just like jaws were just dropped.
Yeah.
And what did he do? In the coming days, since he had a massive short position, he unwound his short position, made I forget how many billions of dollars, and then bought back into the market.
Yeah.
So just keep all that in mind, is that, I don't think we're at the trough yet. Again, the floor could fall out for a period of time. I think we're probably going to get on the escalator right back after that.
Yeah.
But just take when someone isn't making any declarative statements of doom and gloom, or all is fine, take it with, hefty grain of salt.
Yeah. It's what makes these interesting times.
It is. It's exciting because, like we've talked about all the time, there's going to be huge opportunities. You can also get run over. Yeah. So it's a high risk, high reward scenario, but massive amounts of wealth are going to be created.
Yeah, I agree. I think things are starting to grow. Population, economy. Let's hope for growth at some point in 2023.
It's not on the report today. Maybe we can send it over to include. But I was looking at a lot of the ISM surveys and indexes, like the manufacturing index and service industries and hospitals. Things have bottomed out, but they are actually they've turned around as of recent. Seasonally, they shouldn't necessarily be, but things are actually they have been very bad the last couple of months.
Yeah,
but there is some evidence to suggest that we are bottoming out or near a bottom.
Special message to the Fed. I did read an article that said you don't have to raise rates, so we're good. It was a good article. It's basically saying that a lot of the effects of the Fed's rate increases, they're still yet to be felt.
Yeah.
And so they're going to be very tempted to raise rates. They probably will. But, there's an argument that's out there. At least one person was brave enough to write an article to dare suggest that maybe we should just like coast.
Oh, I've heard. Yeah, no, a lot of funny people are saying. I've heard a lot of people saying that, not necessarily the Fed, but no, I think it's going to be 75 basis points November, 25 in December.
Great.
And then they're kind of at where their target is. But let's see what happens to CPI. Again, once let's see where it comes in, because they're not even using the right numbers. But we'll see.
Yeah.
Yeah. All right. Well, this is a good time, Matt. So politics, multifamily, and big picture stuff today. Not exactly getting into the weeds, but I think that's what makes the Gray Report a little bit different from your other, pull them out of a hat multifamily podcasts, which are great. I love watching. Of Matt, how do you get started? Tell us about a deal, and which is all good stuff. What do you like to do? And that's fun, but I think this is really important because you gotta have your peripheral, head on a swivel to understand what's going on in an economy like this. If you're actually in the market making investment decisions, if you're just like curious because it's a fun thing, good stuff too. But like we're here to make some decisions, take risk, and calculate risk.
Yeah, and that's what I really like about apartment kind of housing in general is it feeds into so much. Mm-hmm. So much is like the bedrock of the economy that that it reacts and is reactive to housing. So it's a great industry.
And I think what we do here uniquely on the Gray Report, Matt, is that again we're in the middle of it all. We're not on the sidelines reporting just these articles and what we hear out there and talking to people. We're doing all of that, but we're also doing it ourselves.
Yep.
We're going to be transacting, $100 million worth of real estate over the next, couple months. And, we do that on a regular basis. Mm-hmm. And, we're in contact with brokers, lenders, buyers, sellers on a daily basis. And so we've got a lot of, again, all that's anecdotes, but it's also real-time information. We can cross-reference with what the data is showing from a lot of the research institutions out there.
Mm-hmm. We got to make these. We got to make these decisions. We can't just say them.
Exactly. Yeah. We're using this information to make real-time decisions, and this is why one of the reasons why we do it, because we need to stay up to date.
Yeah.
Investors need to do the same thing. So make sure you're subscribed to the Gray Capital YouTube channel. Wherever you hear podcasts, you can download, listen to it as a podcast as well. If you are an accredited investor, you're interested in hopping on a deal with the Gray Capital team, just go on to gray.fund, learn more about the Gray Fund. We're going to have 5 multifamily assets, great markets, stable Midwestern opportunities, mostly A-class. We got a couple of B-class deals in there as well. Again, hop on over to gray.fund, schedule a meeting with the team. We'd love to have a conversation with you, learn about what you're trying to do with real estate, and see if it's a good fit. Matt, Gray Report this week.
Thanks.
Everyone, have a great rest of your week and see you in the next episode of The Gray Report.